So this is just going to be a quick little stock talk, right? Kind of what's going on. Obviously, we have a gap down. Well, start with last week, right? We see a little bit of a weak breakdown last week, but throughout this kind of range, you're finding like an internal high or low. Like there's a bidder throughout this little like 4-day pocket, 5-day pocket, following a buyer off of this 677.6 gap, right? So we see a bidder here, and we see kind of a weak pop in this bar by bar imbalance, a notable kind of sweep of that gap, and then a gap down on Friday that doesn't see much continuation, but sees a buyer nonetheless, right? And now all this is, like I said, still a little bit speculative. The way I kind of look at things, I do think that the weekly expiration is going to be very pivotal going forward, or quarterly expiration, just because of the fact that there's certain windows short side that present themselves based on the movement of the options market and the behavior and the windows and the hedges and the positioning. And I do think that you can potentially see a short-sided trade develop before or after. It's really kind of speculative, right? We have SPY here and SPX and QQQ really building out a distributive range, and I do think a path of least resistance through 590 and through 655, where you're seeing attempts to mark it up met with selling at the highs that really show a diminishing progression from buyers and a larger seller party interested up here. And at some point, that demand will be wiped and the path of least resistance will be established, signified by a change in character and like volume divergence. But for now, it's just kind of little pockets, little windows, little ranges, right? What I will say here is we have a gap down from Friday into Monday's gap. They bid a good chunk of this on the overnight and pre-market session, if I'm not mistaken. Yeah, a good chunk of it, right? But I will say this, right? I think we have three attempts at 677 that haven't been met with much continuation, right? We see this gap down, the fall through very weak, a hammer candle, a hanging man at the highs, another attempt to find a buyer within this gap, met with a failure to even establish a new high. We fill this gap and we really get nowhere. So when we think about draws internally in this range, I wouldn't mind looking for a short within this gap, right? And then targeting 677 and then 671 if the buyer off of 677 is very weak now. What I will say is there's a lot of names that I think can see some reversion, right? Microsoft, I do like Microsoft. I don't like it quite yet for like a leveraged position, but I do like this name. There is signs of a buyer. There is an extension and a reversion that's going to happen. Coinbase, this actually set up really nice if you wanted to bid this Tuesday candle. This is a reversion kind of waiting to happen. IGV, off of the April lows, right? This is a reversion waiting to happen. The highest volume we've seen ever. A lot of these names like the Adobes, the CRMs, all of these giving us signs that a reversion is going to happen. But what I will say is, I think that's just a means to an end, a reversal, a reversion. The capitulation in the late bears getting trapped, and then they'll get trapped again when we see like a 20% rally on some of those names, right? But I do think that it's speculative. What I will say is a gap down like this, getting immediately bid with very like unstructured follow through. When you look at kind of like the highs sold off into the gaps that we have, is not appealing at all. That is something that I really will note, and it's really important to analyze that, because what you would have wanted to see if you were kind of bullish on this would really be like a super strong follow through, or like a super strong buyer off rip, a failure within the gap, and then they're bidding it lower. Instead, you're seeing like a passive seller within this gap, probably waiting for, I think we have data on Thursday. So that's more than likely going to be like a catalyst. Jobless. Yeah, we have some data. So jobless NFP, right? That's usually like a good data set where they can capitalize on the liquidity from jobless and utilize NFP to kind of mark it down in regular trading hours. But this is not healthy behavior when you really look at the structure of these names, and especially SPY right here. This is a very good window to take a short to 671. Honestly, it really is. Like, I'm debating buying some March expiration puts to target 671. Like, this is a pretty good opportunity developing. But you also want to wait, right? Because we see a big VIX spike, right? The Vega is going to spike those options, and you're going to wait for VIX to crush. You're going to wait for the data sets to spark the liquidity, and then you can pounce, right? Because you don't want to buy inflated options due to a 25% VIX rally that are going to crush. And when time comes into the equation, right? Remember, options are time and volatility sensitive. You're going to see these crush. You're going to see the kind of mitigation into the gap, and then the subsequent reversal probably to 671, right? I like Microsoft. I like a lot of names long into some reversions, like an Amazon as well is very, very notable right here. But it's a tough range, right? Even like an NVDA here, I'm looking for a short, right? We see the potential LPSY put in, and then like a fake out off the report. Like, you didn't even need the flat open, right? This touched 203 off the report, opened up red, saw like a 10% decline, and then a very minimal gap down that's going to get bid. And ideally, we can see volume divergence leading into this gap to mitigate this bar-by-bar imbalance and this gap down from the earnings report and the following Friday. And that should push us to 171, and then subsequently down to 164 most likely, if we're going to see like a path of least resistance through this range and maybe to 150s. But this is a redistribution internally here, right? Like a preliminary supply, a climax, a UT, right? A reaction here, very easy. Took no time at all for like a 10.5%, 15% decline. And then a UTAD off the report, all in the confines of a higher time frame distribution, right? So that's something I'm looking at. And that's really it. I still have a full Moderna position. I haven't trimmed any. This is 4 inside bars. We're finally breaking out. We see a really nice follow through off the gap down that gets bid. Ideally, we can see a strong daily candle closure. But I'm looking for 55. Obviously, we kind of almost tapped it, but I'm not super. I think this could push pretty high, honestly, based on this structure, this general structure, right? I do like this consolidation. We see a big spike on energy names, which is not surprising based on how these have been developing the past few months and years. But, I mean, it's no shot in buying this now, right? You have to be positioned beforehand in commons. I like Oxy a lot. The shares already up 30% on the year. Yeah, I mean, really, like the structural weakness in XLF is notable, and the windows are notable, right? I don't want to be super precise. I do think that we can see 671 this week, and if this we could see a true UTAD, we could not. I'm not going to speculate on that. I'm more or less focused on, like, if we see finally this gap get filled and we see a lower high again, the focus is going to be 655 to 650 or 660, right? And if it lines into a post-quarterly expiration, that can give us some momentum to push down to, honestly, 620, 630, which is a big time decline. That's 10% from the highs. But this is a very, very weakened structure in terms of like a buyer's perspective, right? And we do have a lot of names that offer reversion opportunities. The MSTRs, the Microsofts, the Paths are looking good. AVGO could see some continuation up to 374, right? We don't know, but I will say I'm speculative on the long side. The only long side I really am big on is Moderna Commons, and I'm up 30% on this position right now. Just about. Yeah, I'm up 25. I'm looking for 30%, and I'm going to really cover all of it. But that is really my only long that I'm focused on right now in terms of a shorter term trade. Like a TSM distribution is very notable, but there's not really much of an edge that I kind of like, per se. There's just not really much of an edge. Man, this short was so good last year. I caught this move, and I didn't roll it. But, nothing happens, nothing is new that happens in the stock market, right? There's a reason we see XLE and XLV and XL and materials as our highest performing sectors within the S&P 500 this year, right? Because the money has been rotating there. We've had these names being beaten down. We've had rotations out of tech for a long time now in financials, the two biggest sectors in the S&P 500. And everything aligned, right? Everything developed. We see the Venezuela news sparked it sparked the rally. It's not like that's not the reason that energy is rallying because we going to take the oil from Venezuela. It's the sentiment and the catalyst and the counterparty liquidity that's developed, and then subsequently those informed hands are going to offload their inventory. Honestly, I mean, I don't want to say soon, but it could happen in a manner where a lot of people are going to be like getting bearish energy or bullish energy at the end of the cycle, which is not surprising, right? I don't think this is done yet, but a lot of people are going to, similar to what they did in June, right? And I even got trapped on this. A lot of people are going to get energy bullish and try to rotate their assets and their money into that asset and get melted, right? And then they're going to sell, and that's going to start the downtrend or the downward spiral, right? So there's a reason, and even XLP is performing phenomenally, right? Phenomenally in comparison to XLK, right? Like there is a reason that those are our green sectors and those are our structurally sound sectors. Now a big reason that the indexes are pinned is dispersion, right? We're seeing names and constituents pull away from each other. Oftentimes that can happen before these expirations. I do think that the quarterly OPEX is very pivotal here. But when we see this dispersion, we see names like tech, financials fade. We see sectors like those. We see sectors like consumers, healthcare, energy, material. I mean, look at materials. Look at the materials sector. I didn't even look at this the entire year. I never look at this, but look at this sector right here. That's insane. Utilities, right? We see these names performing well, and it's not a surprise. But what I will say is some of these names, the energy trade is not going to go on forever, right? The energy trade is not going to go on forever. And when everything kind of starts to align, right, there will be rotations. There will be rotations, right? Commodities, risk-off names. There will be rotations. There will be things that outperform it. But when everything starts to align, the S&P 500 is going to begin to fall. And it's going to begin to fall relatively quickly, and the large weighted names are going to have a big impact on that. I do think crypto reversion is probably going to happen. I do think it will. I do think that crypto can outperform a lot of things if it stays kind of stagnant and then outperforms during like an S&P and tech equity decline. But for now, I mean, this looks structurally sound for a push to like 70 to 80,000, but I'm not really super confident in it. So that's pretty much it. I mean, that's a talk on the expirations, the volatility, the short-sided window. SPY, I do like SPY puts. I'm not going to lie. I really do. Like, I'm kind of resisting the urge to purchase some SPY puts targeting 671. An NVDA short position could be in the works here soon for me in the mid upper 180s, targeting 164 to 170 via NVD or NVDS. The dispersion is evident, and I'm not surprised by anything that's happening, right? So that's just a quick little conversation,